You're listening to the Kelly+Partners Investment Office Podcast, where you'll hear directly from some of Australia's leading CEOs of private companies that are in a high growth phase where we've taken an investment position. Welcome to the Kelly+Partners Investment Office Podcast, where we interview our investee company leadership and get them to share news on their business and progress. And this morning we're joined by Rob Nankivell, the Managing Director of iPartners. Good morning, Rob.
G'day, Brett. Thanks for having me, and Anoop, and everybody else.
Joined by Anoop, Kalra, our Chief Investment Officer. Good morning, Anoop.
Good morning, Brett. Good morning, Rob.
Great to get everyone together for a chat for our listeners. Rob, can you tell us about your personal background and how you landed in your current position?
I'm a long-time banker for my sins. Joined after uni, joined Macquarie Bank up in Sydney. I'm a Melbourne guy originally, though. Worked there for a number of years in the sort of the derivatives markets area. Then joined what was Chase Manhattan Bank in Sydney. Then went over to London with JP Morgan over the turn of the century. Did investor-driven structuring, I guess you'd call it. And then post 9/11, had a bit of a rethink about my situation. What was it all about? Came back to Sydney with my young family and set up a couple of smaller boutique businesses. And the latest iteration of that is iPartners, which is where we are now.
Terrific. And what can you tell us about iPartners for our listeners, Rob?
Probably the best way to describe iPartners is it's a heavy technology user putting what has been around for a long time, the syndication of individual investments, but in offering them in a more broad way to a bigger pool of investors, initially in an idiosyncratic way, so i.e. individual opportunities. Well, we source opportunities, then we offer them to our investor base as a co-investor model. My partner and I typically lead the investment rounds, at least in the early days, most particularly. And we offer those opportunities out to our investor base. We then pool the money and provide the capital raiser a single ticket, which is us. And then we deal with the investor base. We provide a disaggregation service for smaller investors to get exposure to things that we find interesting.
So, Rob, to simplify it, essentially, iPartners is a software platform for the investment into alternate assets, and it provides everything from onboarding of an investor to the administration of an investment, and then also the reporting of an investment. Is that kind of the way to think about it? And then you actually source the investment ideas that then go through to the individual investors.
Yeah, that's right. The initial core or the DNA of the business is an investor first platform. That's critical, and that's a differentiator compared to most platforms because we are investors. That's the reason why we set the business up. We're a cranky middle-aged ex-bankers that were sick of filling out forms, sick of verifying our IDs for the umpteenth time, and we wanted to have a platform that took us through the three stages of investing, which is verification and certification and adding your investment entities. That's the first stage. So getting yourself set up, then looking at different opportunities in an easily accessible way, and then executing those opportunities where you want to. And then post-deal, how do I get my holding statements and my tax statements, and when's my next distribution due? What are my performance metrics and all that sort of stuff. So the post-deal stuff is just as important.
And because we're dealing with alternate assets, these are investments that typically have been very difficult for an individual investor to get access to.
Yeah, it was the thing that Travis and I, as the co-founders, where we sort of met and discussed what we were interested in as investors, was family offices in the bigger end of town had been offered interesting opportunities forever, really. And by syndicating or by aggregating smaller tickets into one entity, we thought we could get exposure or get access to different opportunities, just like the bigger guys, in inverted commas. Alternatives are at the very core of it. If you want to get your beta, you go and get an index tracking ETF or do whatever you want on just getting the market move. And then we think there's interesting opportunities for some part of the portfolio in a low interest rate environment.
And when you started, Rob, the thoughts that you had about the business that the market needed versus how that's turned out, what were you right about, and what have you learned to adjust your approach?
What we were right about was an assumption that we made that there were more people like Travis and I, so self-directed, interested investors that were looking to see things presented clearly in a transparent way with a clear description of the returns and the risks and the fees. So that's as it proved to be a correct assumption. There are a lot of interested people out there, and technology is a means to access those people more easily. You could be a sheep farmer in the Wimmera, a dentist in Burleigh Heads, whatever it happens to be. You don't need to be sitting in Pitt Street or Collins Street. So technology is a driver of that. The evolution of the business is, it's ongoing as you know, your business continually evolves and what have you. The technology that we built for ourselves, we now offer that out to other capital raisers and under white label versions of our offering. And that's called iPlatforms. And that's actually a bigger part of our business now. So our iPartners is our firstborn. It's what we do. It's what we love doing. We're investors. We like investments. And the iPlatforms is providing a service to other people that have their own database of investors that are looking to provide an easy to execute method of investing, just like we built. So that's proved to be something that we didn't really set out to do on day one, although a couple of our shareholders initially said, if you can solve it for yourselves, you'll find broader applications. And that's proving to be the case.
Yeah, which is interesting because so many of the world's greatest businesses have been built by people who were trying to solve, a problem that they sort of knew intimately. There's a great book I read many years ago, Rob, on 32 billionaires that Forbes profiled, and they said that the common trait was that they were insiders to an industry that didn't accept the status quo. So they really deeply understood an industry, but they found much of what they saw there as either deeply mismatched to the client need or completely unacceptable from a values point of view, or both, and had this great drive to change it. Do you think of yourselves in that way?
Well, I think you have to be fundamentally interested in what you're doing to start up a business, because it takes a lot of effort and you're in it 24 hours a day, 7 days a week. It permeates your very core of your being as you're building your business. So you'd want to enjoy it at its fundamental. What's the problem that you are solving? And that's where I think we're lucky, because when we find interesting investment opportunities, our levels of energy are elevated, at a personal level. So it's nice to be interested in what you're doing at the product side. Investor first is still our sort of guiding light. How do we absolutely prioritize the investor experience over and above what we consider to be the offline competitors, which are really providing a service to the capital raiser? It's like, how can we manage your registry better? How can we manage your cash flows better on that side? And investors are a byproduct of it. And as an investor across a lot of different platforms myself, it's a horrible experience trying to apply for forms. It's an old world way of doing it. And we think we've hit a chord. We're not claiming success by any stretch, but we're on the path.
Yeah, it's very, very exciting. So the size of the market that you see, your level of penetration at the moment, and your sort of 5-10 year view of what comes next?
Look, I think the tailwinds for us, and they're transitory. I don't know that they're always going to be in place, but the low interest rate environment for us has meant that people are looking for alternatives. There has been a institutional down focus on that. The Future Fund was one of probably the bigger early investors into alternatives, and their returns have been good. It's always a bit hard when the S&P rallies 30% in a year to get a clean comparison, and you're in a space where you're offering interesting returns for a measured amount of risk or an understood amount of risk. And if the low interest rate environment and the massive liquidity has driven outperformance in the vanilla products, how do you get a foothold there? But we think enough people get it, and the opportunity to do things is still proving very popular. So at a core level, alternatives are getting more interesting to more people. We think rates, whilst they will tick up, won't get too out of control on the upside, so there will still be a demand. We think equities are fully priced, so we think there's opportunity there for more allocations from more investors. And we think that the platform business, more capital raisers have got investors starting to be at the core of their decision making, which is interesting and good.
Rob, one of the things that I really like with the business is the iPlatform side of it. Yes. And we ourselves at Kelly+Partners are a user of the platform. Can you, I guess, give us a feel for why, who some of your counterparties are, if you're comfortable telling us, that use the platform, and secondly, why would they use your platform? What is unique about your platform? And some of your customers are actually very, very big fund managers. So why would they use the platform that you've developed? What's unique about it?
The iPartners is our in-house R&D for our iPlatforms business. So we do alternatives ourselves. So when a capital raiser wants to start a business, and we've had good examples of this where people have come out of very big firms, global private equity firms, for example, to set up a distribution business. They're very good at finding opportunities on a global scale. They have a very good investor base. That's their skill set. That's what they love doing. And if we can provide the infrastructure to enable them to do what they want to do best, we view ourselves as a partner of our clients. So when they have a good bit of feedback from their investors that, that onboarding was the best I've ever done, the execution process was seamless, I can clearly download my holding statements, my tax statements across all my entities, across all reporting periods, that feedback is fantastic. Now, it's not perfect and it never will be, and it's an evolving platform. And as we add more users, it's an ecosystem of like-minded people, I suppose. A good example of that is one of the users wanted to have an NDA before people access the data room where they could see all the documents. So click on into the tech an NDA type agreement first, monitor that, allow them access to the data room. Then there's things like enabling advisors to execute under power of attorney for their investors, which is, if you get back to our DNA, is not what we do. We're self-directed investors looking at deals ourselves. But as the evolution of the business grows, we have more people pulling us and challenging us to build a better box. So that's what we're doing.
If you think about the benefits of the platform, Rob, compared to either the offline world or any, online competitors that exist, can you, I guess, provide us with a feel for some of the benefits of somebody coming over to iPartners or iPlatform, I should say? Because in reality, it's not that you're cheaper, yes. And in many times, I think you're actually a little bit more expensive. Yes. But the user experience is truly different.
Yeah, look, I agree on the pricing. The pricing, having from my sins worked at investment banks for a long time, sort of 101 is never to compete on price. It's to compete on service, and which is okay as long as you provide the service. And so, we are finding where we fit more and more as we get into bigger potential counterparties and people that use our platform. And some of them are at the very big end of town. And there's beauty in simplicity, and simplicity is difficult to build. And it's that the three stages of the investment process are as important as each other. It's how do I onboard my investor base? How do I make sure that they're all verified and certified for AML and KYC and all that type of stuff efficiently? Then how do I offer them access to the data room and offer them a suite of documents which is simple, transparent, and easily understood by most, enabling them to download them and share them with their advisor if they choose? And then the post-deal part is just as important. So that registry function that we manage ourselves for our clients is key, because we enable secondary trading on our platform. To do that, you need to run the registry. So we're sort of offering a liquidity point for alternative assets where they're typically, it's once you're in, and you're locked and gated and what have you. But we've had situations where we've done feeder funds into other people's funds which are illiquid and enabled secondary trading on our platform, because there is that 9,500 of users which can provide some liquidity in some circumstances. It's not guaranteed, of course.
That's a really interesting point and a huge value add, that having that secondary market kind of capability for people.
Yeah, look, it's not something that we sing from the rooftops as a promise, but it does work and it works well. So once you go to your dashboard, you can go to your line item of your investment. You can hit transfer, which is an efficient way to transfer between your own entities. So if for whatever reason you want to rejig your affairs, or second, if you want to sell, you can click the sell button, choose your volume, choose your offer price, comes to us as the registry manager. We can either offer it out bilaterally or to the syndicate or to the broader investor base. And we've generally been able to help people out to get some liquidity where required.
And Rob, when you've seen customers start using the platform, what's been the experience in terms of, do they come back and drive more and new products through the platform after the first experience? Is that typically what's happened?
You mean the iPlatforms clients?
Yeah, iPlatforms, but more so, I guess, on the iPartners side, where somebody's launched a fund through the platform.
Yeah.
Have you typically found that after the first experience, they come back and with further funds that they definitely want to use it?
Yeah, we've got frequent users amongst our capital raiser partners. The first deal is always the hardest, just because of that normal translation risk between what do you mean by that, and it's just, we have our own language, our own way of doing it. Once that mold has been put in place in terms of documentation and process, people then go, oh, that was easy. Okay, well, we've now got a facility in place. It's rolling off. Can we refinance it? Can we do another one? We've got multiple examples of frequent capital raises. Once their brand has been familiarised amongst the investor base, the take-up is really, really good, because you're not having to describe again to that particular investor base how it works. It's just that this is the same as last time, slightly, and here are the differences. Being
on the platform provides credibility, and if people have had a good experience, they're happy to go back.
Yeah, look, we're pretty careful with our capital raises in terms of not wanting to overpromise. We are the investors. We represent our investors. So we're not long risk and then trying to offload a position to our investor base. That's a key difference.
Yeah,
that's a completely different relationship with your investors. If you're on the other side of the table trying to de-risk something, then you are selling to them. We're offering a co-investment opportunity. It's like, if you like it, invest in it. If you don't.
Yeah. So you're not a transactional person, which going away from your old investment banking days, you're not transactional. You're alongside.
That's right. Well, yeah, exactly. So we are investors. We do invest our own money. The staff, shareholders, and would be always a relatively meaningful position in any capital raise that we do on the iPartners side.
And Rob, what do you see as the outlook for the business? Where do you want to take this business over the short, medium, and longer term?
Oh, look, I think we've got to keep focusing on doing what we do well. So not get too thinly spread with wanting to do everything for everybody. We have some ambition and we have done some work on providing the platform in different languages for different jurisdictions. There are some similarities in the Southeast Asian markets with the wholesale retail split of investors and the way it works. So we're interested. We think Australia has a good legal framework and it's well respected globally, so that investors across border may well be interested in some of our transactions. For example, a lot of our property deals might be interesting, and we're continually building out the platform capability. As more users use it, they want different things. So that's going to keep happening, and it's happening at a fast pace. And we're just got to make sure that we do it in a organised, logical way and don't get too scatterbrained about it.
The investment environment's changed over the last 12 months with a number of macro factors that are impacting, the greatest one being the expectation of rates actually increasing, and rates have actually increased. How much of a challenge do you think this presents for the business, if at all?
It depends on how fast they move and what the impacts are on the equity market to a large extent. If rates move super quickly on the upside and the equity market really craters to a material extent, people pull back their investments across all asset classes. So I think we might be caught up in that, even though we're doing something else. People just go to cash as a default position. So that could hurt us. So we're mindful of that. We think, though, that a modest increase in rates might result in a modest reduction in the equity market valuations or a flat market for a while. which will be supportive of people doing what we do. And we still think in the private credit space, there are opportunities. In the property side of things, we've had interesting transactions in the hotel space, for example. Our investors have enjoyed that experience, both in terms of a thesis and also the delivery of the returns has been positive in a difficult COVID-affected market. Across regional New South Wales, you got to imagine pubs went to zero, and then with the stimulus, they went right back up again quickly. So it was an interesting ride. But our partners on that pub side have done a good job and continue to do a good job.
And Rob, the business has grown really, really strongly over the last kind of 4 or 5 years since you've launched. In the last couple of years, you've been pretty much doubling revenue year over year. Where do you see the trajectory of the business over the next 5 years?
I'm much more comfortable talking about what we've done than what we're going to do as a starting point. But I think we are still at an early stage growth phase, that's for sure. We've invested heavily in key personnel, and technology is a key part of that. So our tech team has been bolstered and it's across border and works on a 24-hour work line, I guess you'd call it. So that's exciting.
Yeah, I guess just that question on staff, Rob. Can
Yes.
you give us a feel for how the business has grown and how do you attract and retain staff? Because for a business like yours, it's really important.
Yeah, look, it's a challenge. We're in the global competition for headcount. Like the tech people are a good example of that. They can effectively be employed by anybody anywhere. We have a strong South American core of our tech team, mainly driven by the fact that our CTO, whilst based in Sydney, is South American, so Argentinian. So we've got a core group of guys there, but they are getting approached, and as we build out that team, the people there are getting approached from North America. So we're competing against other people with stronger currencies than ours to pay. And in terms of local talent on the business side, what we're offering people at the coalface is an interesting place to work. It's an innovative environment, as opposed to we've been doing this for 30 years and this is the way we'll always do it, mate. So there's really no boundaries to what we could look at in terms of an investment thesis. So anybody who wants to, champion a area of focus is quite free to do that, which is positive for a lot of young people. And we think that the growth phase is exciting to a lot of people. That's how we pitch it in different terms and different ways. But we're in a competitive market. We're an interesting business. We've sort of got off the runway and we've now got some track record. There's growth ahead, but we need to do it with good people, and we're constantly on the lookout for the right staff.
And Rob, with that, in terms of bringing people on, we've always found, a vivid picture of a compelling vision helps. What is the vision that you can sell, and can you incentivize them in terms of a future IPO or some sort of significant growth in their own wealth?
Yeah, look, we don't. You might have seen some media where we sort of do get a bit of IPO kind of conversation in the media, not always driven by us necessarily. That's a potential. I think the growth is a real attraction to a lot of people. And we think if we keep doing the right things at the micro level, which is let's make sure the investors are always front of mind, and we keep doing what we said we were going to do, then the exit, in inverted commas, will look after itself. We're not building it up to, on a defined runway. We're saying if we keep doing, we think we're in a good space. We think the tailwinds are supportive and will continue to be supportive. And if we keep doing a good job within that, we'll be attractive to somebody potentially. So we're not setting it up as a 30-year business necessarily, but who knows?
Yeah, it's interesting because I see in Australia, like the major disease with capital markets, people believe that an IPO is an exit event rather than a capital raising event. It's part of a long-term journey to build value. Yep. And if you can enroll your people in that journey with a long-term view, like I do think PE often has said, look, join, put some dollars in, and we'll sell this thing to someone else at a higher price later, using the capital markets for an exit rather than in my view, what they're there for, which is to provide capital and opportunity to grow. Yes. Value so the company can reinvest over time. But we've certainly found that, being able to show people a long-term vision where they can grow their wealth with you is quite helpful.
Yep.
No, it's good. So I always like to sort of finish with a motto, quote, or thought that but the best summarizes your approach to life. Do you have one?
Bizarrely, if you knew me personally, you'd think, I can't believe you're going to quote a poem, but there's a poet called Robert Frost, and he wrote a poem, and it's the basic thrust of it is take the path less traveled.
Yeah.
And that might sound ridiculous from somebody who's had a 25-year career in investment banking, but I always was involved in new initiatives within those firms, and then coming back to Sydney and taking stock of my life after 9/11 and having being closely impacted by that, I sort of definitely take a holistic view across work and life at every junction. And as you get older, you sort of want to make sure that you're enjoying what you're doing, because stuff happens that is off the path.
Yeah, it makes a lot of sense. So I want to thank you, Rob, for joining us today, and for Anoop for your great questions of Rob. Hopefully for all of our investors and other listeners, this is a great first introduction to iPartners. I look forward to catching up and tracking the progress as things move forward.
Right. Thanks, Brett. Thanks, Anoop.
Thanks, Rob. Nice to meet you.
Thank you too.
And as I love to say, Rob, have a great day.
Thank you for listening to the Kelly+Partners Investment Office Podcast. We hope you enjoyed the show and found it informative and interesting to learn about our investee companies. If you love this episode, don't